What's up YouTube, it's Louis here, I hope you're all well. Today we're looking at Vechain on the daily time frame. We did get pulled exactly to, literally, we got pulled to the magnet exactly as predicted. After forming this bullish cross, we've called this entire move from here. We've been saying that as long as Vechain is above 2 cent down here, that it's bullish. Although we're seeing many alts capitulating today, it looks like Vechain is holding up one of the best out of them all, although it is down 5% today. We've got some coins like HBAR that's attacking this low over here right now. It's actually lower than this low over here, so it's not good for some alts. For Bitcoin, I do recommend you guys checking out the Bitcoin update. It's so important. I know Vechain looks all lovey-dovey, all amazing at the moment because it's met our technical target out of the inverse head and shoulders we had here. Do you remember we were constantly flipping the chart, telling you guys that eventually we're going to meet this target, and essentially the target is just the gold box. We had multiple patterns signaling that we're going to come to in around this gold box. It's essentially been acting like a magnet. We had a rising wedge over here. When you break out, you go to the bottom of the wedge right here. So a lot of things were telling us that the point of focus should be the magnet, this gold box over here, the golden pocket. And I remember a few days ago people weren't too keen on my golden pocket. Well, it looks like it's been working out just fine, doesn't it? But when you reject this golden pocket, the actual signal is this is the push, this is the exhaustion phase, and this is your continuation. And actually, really and truly, that is what should happen. So we need to make sure this does not happen. How do we do so? You can see we're rejecting this trend line. We had a trend line something like this. Let me just get it super accurate. Yeah, we had a 300-day trend line like this, but we also have another line. This 300-day trend line was broken and back tested the support when the CPI data last month came out. 13th of October. And we've basically been heading to the gold pocket ever since. That's why I put the magnet there. And it looks like it's running into the, if we get rid of this line now, this key resistance over here. It's got less touches, but it's still a resistance, of course. There we go. So yeah, that is the final thing. You can see it's in line with the gold box. So essentially, you're trapped within the inverse head and shoulders neckline, and this over here. So you can see we've got an apex coming into down here around 2 cents. So you could be trapped in some sort of falling wedge going forward. Of course, we don't want this. This is a bullish pattern essentially, but if you fall below, because you can actually do so, although it's a bullish pattern and we should break up back to the top eventually, we don't want to break down. That's of course going to validate the old shoulders pattern, and much uglier patterns to the downside essentially. So what do we need to do going forward? I'm going to have to add new fibs for you guys. If you are enjoying the video so far, please don't forget to leave a like. Not enough of the Vechain viewers are liking the videos. I do ask if we could get these videos to over 100 likes on each. Please leave a comment to boost the algorithm to help other Vechain people get to these videos, so it comes up in the search results essentially. But going forward, you can see we have the golden crossover here, or the bullish crossover here, which hasn't been retested as support just yet. So going forward, you need to hold that. If you lose it, this is essentially what's going to happen. You should come back to the lows down here. So if we don't hold this, you come back to the lows. So you see we had a bullish cross. We failed to hold the 55. We fell through it, flipped it into resistance once and twice. So you're coming back down to that low. We failed to, and that's why we had this other spike up. We had some patterns forming. There's no patterns forming at the moment. Just have this older neckline of the inverse head and shoulders, which we met the target out of, as well as this old 300-day trend line as well, and that's acting as resistance. And we've got these two lines, so essentially we're trapped between here, and that is a falling wedge. Nothing has formed as of yet, but just going off those two lines, you can see that's the structure. You got these two constricting lines, they eventually meet, and it's downward sloping. And with anything that's downward sloping, it results in an upward push. So you could say that this was a falling wedge and you went to the target. So you got another falling wedge over here. And if we do continue in it and we eventually break out, your target is back at the top, this gold box. Exactly what you did here. You do have a falling wedge here. So that's what we need to see going forward. I will add the fibs now from the low to the high over here. We've got a golden pocket. I'll just get rid of that for a second. draw the golden pocket out. Exactly in line with our bullish cross essentially, and I'm going to drag it backwards just to see we have some support in the past, some fake outs of resistance. So it was resistance here, you got above it, couldn't hold its support, went back under it, confirmed it as resistance, made that lower low, but it was higher than this low. It was lower than this, but it wasn't lower than that. That's where we began this uptrend, because you made a higher low. So with that rejection right there, or out or off this purple line, as well as this gold box we've just drawn, you should have actually gone lower than 1.98 cent, but you failed to do so. You created a higher low, and we eventually reclaimed it. Then we had our failure of the bullish cross, so that sends us back down all the way to here. So the next step is getting back above this gold box. We had multiple patterns to say we were coming into this gold pocket, so I'm really happy that our target was met. We had this double bottom as well as the inverse head and shoulders. I will just check, because I did give this to you guys. That was over a 25% move, free on the channel. Just stay on the channel and there will be more as the days and weeks go by. But yeah, we do everything on the daily time frame because we want to wait for the daily confirmations. Right now, there's 9 hours left of this candle. This candle won't stay the same as it is. We could create wicks. We could be all the way down here. No one knows. That's why I'd rather wait for the daily close. And for me, that's midnight GMT. So just check what time that is where you are. But other than that, yeah, we just need to come into this golden pocket and hold it now. If we lose it, you create the reversal wave, which is a big, as I said, like here, you failed the bullish cross, you don't hold it, you go back all the way to the bottom. Really, you should lose the low. So that's what we need to be thinking over here. You're going to come back down to here if this doesn't hold. And really, you should lose the low, and we have some targets prepared. 1.7 cent, 1.4 cent. But this is not going to happen if you're holding above 2 cent. This is what's going to stop that from happening. But I have to prepare you guys, okay? But for the moment, you formed that bullish cross. We met our technical target out of the falling wedge, the W pattern, as well as the inverse head and shoulders. Everything here has been given to you literally day by day, completely for free. So if you appreciate that, do try and get in a super thanks. Check out the memberships. I have a 50% discount on the course at the moment, but also giving away a free course as a thank you for 4,000 subscribers. If you want to enter the giveaway, simply just follow me on my Twitter, Louis_crypto. Private message me there for the education as well. But yeah, the details will follow in the coming days or so. But yeah, it will be this week. Thank you guys for watching. Like, subscribe, and comment. And as always, peace.